Good morning. This is Andrew from Abraham Trading Consultants. It is actually Sunday morning, March 16th, 2014. And before we begin, I just want to give the quick disclosure. This is for educational purposes only and trying to help you become a better trader. And you can actually see the disclosure on the website under disclosures. What we do at Abraham Trading Consultants is we try to help you become a better trader and investor. And that brings us to where we're really at right now. As far as our goal is to try to buy the strongest stocks in the strongest sectors when the market's healthy. And really what happened on Friday really hasn't been all that healthy. And not that I'm a bull, I'm a bear, and I'm not calling a market decline because that's not prudent. But really I'm reading what's happening in the market and I'm sharing it with my followers. Now, the fact is that we closed on the lows of the day, and you can actually see that here. It's a pretty big negative. The other fact is we've had some down days on very big volume. What's even worse is that many of the leaders are starting to falter. I mean, yes, you have a handful of leaders. Let's say the top, let's say if I call it data, is relatively, I mean, it's still sold off from the highs here of 102 down to 90. You can go one after the next. Facebook hasn't been that terrible. Green Mountain has had a nice run, which we'd like to see. But many of the other shares are going back to where they gapped up, which really isn't really all that strong. And the other big negative is we've had now, I believe it's 7 or 8 distribution days on the NASDAQ and 3 on the S&P. When you have more than 4 distribution days on the indices, it's a sign that there's severe weakness coming and that there's institutional selling. In conjunction, what I do is I use very simple moving averages. And one of my key rules, and you can use a couple of them basically, is when the 10-period exponential is below the 30, that basically the up move is diminished. The other thing I look at too is, again, first is the distribution days. I want to see how much are we off of the highs. And if you look at just the QQQs, the high was 91.36. And right here, we closed at 88.67. If we, again, you get to pick a number. There's no magic number. One of the numbers I use, if it's about 3.5%, if I'm falling off the highs, it's another red flag. If we're falling below these moving averages, it's another red flag. Personally, I sold off half of my account on Friday, before Friday's open. And again, if the market heals itself, which it could, because again, we've had QE forever, and the government has come in and basically, the proverbial buy the dips, and this can happen again. The market can turn right around again. But the key is to be prudent and to have a trading plan and not, believe that all your shares, even if they're great companies, can withhold a point, because right now it's not looking that favorable. Again, I'm not a bull, I'm not a bear, I'm just being realistic, and I'm reading what's happening in the market. What really is the most delineating factor is the number of distribution days and the number of them in such a short period of time. That means there's a tremendous amount of institutional selling right in here. Putting that all into context, it's prudent to be watching the exits. It doesn't mean go sell your shares or anything like that. You need to develop your own trading plan, and this is what we do at Abraham Trading Consultants. And if there's any way I can help you, please let me know. Thank you very much.